Hey, what's up, everybody, and good morning. This is the Swinging Bull, joined by Amma Jamma. How you doing today, Amy?
Hello, how are you doing? Hi, everybody. Thanks for having me today.
Yep, doing pretty good, doing pretty good. So we have the big Fed interest rate hike later today. So another big interest rate hike is on deck here. And a couple
Yep.
things I wanted to point out is a lot of people are asking, are we going to be bullish or bearish today? So I did want to point out a couple things, that little misconception people have with these Fed interest rate hikes. A lot of people think that it only has to do with mortgage interest rates. And I did want to point out that when the Fed hikes their interest rate, not only does it affect mortgage interest rates, but it also affects credit card interest rates, automobile interest rates. So this is kind of like a interest rate hike that kind of affects a number of things there. And what I was looking at is three possible scenarios. Number one, if they do hike the interest rates at 0.75, which I think is expected, I do think the market is going to be bullish and will react bullish to that coming in as expected. The other two scenarios, in my opinion, if they do come in at a whole 1% interest rate, I do feel like that's going to be a little bit bearish. And the reason being is, if they are hiking the rates too aggressively, then that could put us, definitely at risk for, deeper recession. The option number two, if they only hike it up 0.5%, I do see that as bearish as well, because what will happen there is, I think investors will take that as them not being aggressive enough, and then we'll see inflation is not cooled properly at that point. What do you think about all of that, Amy?
I think that's a great question because I am a little bit I have a little different perspective on that. For me, I'm personally bullish. I think the 0.75 is expected and that's kind of baked in, and I think either way we're going to get that slingshot effect, but then we end up for the most part slightly green, trading within a say a one per $2 range, a 0.5% range max on a 75 point hike. I
Okay.
am I'm bullish if we get a full point. I think that ripping off the band-aid is what, because here's the thing. And I know you understand this, and I'm more saying this so for the viewers at home, too slow of an interest rate hike, you take the risk of the stock market outperforming the rest of our economy as a whole. And that's when we keep getting our heads slammed down. It's the Fed's pushing down the market because it's a risk rally then, and we're overperforming the market. And the stock market can't do that. I feel like a full point hike, that the financial money, that institutional money would come pouring in at that point, because that is if you get a full point hike, that's what's going to curtail the inflation a little bit, and I think would actually kind of head off the recession. But that's me coming from there's a conservative side of financial investing, and there's a more risky side. And the risky side, like Cathy Woods, they're calling for rate cuts. They said we need the money back in the market. We should be cutting rates, this and that. So you have this huge spear of people, and there's no definites in it. There's a lot of different scenarios that come to play here, and it depends on what side of the fence you're on.
Yeah, no, those are really interesting points right there, Amy. I appreciate that. The fireworks are going to begin later
Mm-hmm.
today. I think there is going to be a lot of volatility before they announce it. So we have the actual announcement of the interest rate hikes at 2 p.m. And then at 2:30 p.m., Jerome Powell does have his news conference. Sometimes he does say some things in that news conference that, not only the announcement at 2 p.m., but, have your eyes peeled out for the news conference at 2:30 p.m. because sometimes he does say some other things that also drives the market in one direction or the other. I think we see a lot of volatility before the announcement, during the announcement, and heading into close, and
Yeah.
maybe a little tailwind effect tomorrow as well. So we'll be, definitely playing the volatility today. We're probably not going to be holding anything through the meeting and swinging until tomorrow. We'll be doing a lot of scalping plays and momentum plays and playing the volatility like we've been doing over the past several weeks anyway. You know, kind of playing the short side as well to hedge our long positions, things of that nature. But I do have the SPY pulled up on my screen right now, which is the ETF that follows the S&P 500 index. So I did want to point out some possible levels that we could see possibly to the upside and possibly to the downside, depending on how the market reacts to the Fed rate hike here later today. So looking at my chart right here, SPY in pre-markets trading at 386.11 right now, actually up 0.5% today in pre-market. So that's pretty interesting there. Some levels to the downside, if we can't reclaim like the 387, 388 today, and the market reacts poorly to the Fed rate hike decision. Levels to the downside, I see us going to the mid 370s. That's just what I'm seeing on the overall chart here. So mid 370s to the downside. If the market acts favorably to the rate hike, I see us obviously heading back up to the high 380s, possibly breaking back into the 390s, and then maybe settling around the mid 390s, maybe around the 395 area. Are those kind of similar to the levels that you've been seeing, Amy? What are you seeing on the chart?
I would agree with that. As long as we don't hear the word hawkish come out of Jay Powell's mouth, I'll be happy.
Yeah, exactly.
I mean, really, that word is like a rally killer in itself. Yeah. This is my thought on it. If we're going to have some volatility, I'm not too worried about. We'll scalp that slingshot effect those first few minutes, that hour after. Right. However, if we end up, say, 8 points above our open today, or like 8 points below our open today, and don't rebound back towards the middle, that epicenter, I think we overcompensate tomorrow. So if we're down 8 points today at close because of this, I think tomorrow's green. I think if we're up 8 points, tomorrow's red. We will if we make an exhaustion run. So I'm planning on playing that volatility, and I would really, I think ideally to see continuation green would be to close, say, right around under 389. I don't think we could continue if we push too much past 390, and same on the bearish side. I want to see us and that zero fibs right there. That's if we come down and touch that area on the bearish side, tomorrow will be green. That's just kind of how I feel from the last couple rate hikes and what happened the day following it.
Yeah. I mean, we've seen that slingshot effect before too. So I totally agree with you. You know, again, I was saying earlier, if the market reacts negatively to the rate hike and we do hit this zero fib line that you pointed out, Amy, this low 380 area, you know, if we break below that or even hit that, you know, maybe tomorrow we do get that slingshot effect and you know, maybe market bounces a little bit tomorrow. So all very interesting facts there. I did give out some longer term levels to the upside and downside on the daily chart. But here we're looking kind of at an intraday view here. So we got some levels to look at here. You can see in pre-market, we did hit this 61.8% fib here, which was right around 386, kind of bounced off that this morning. So we'll see if we kind of, you know, I'm thinking maybe between 386 to 384, maybe bounce around in that area until the actual decision comes out and the news conference goes down later this afternoon. And then we'll see what the decision the market wants to make after all that information hits the market. So very interesting stuff there. I really appreciate your analysis, Amy, and I appreciate you joining me. Everyone, I appreciate everyone on YouTube and everyone watching. Appreciate you guys joining us. Please like and subscribe. If you want to continue chatting with us or you want to join our free Discord, please check out the links in the description. And until next time, we'll see y'all in the next video.
Bye, guys.